Hello traders, it's Samurai Trader here. Welcome to this training session. There's an old saying that says the mind can only absorb what the seat can endure. Meaning that when we're learning something, that if we're sitting down too long, or if it goes for too long, we tend to miss out on a lot of valuable information. So I'm going to limit this session to 30 minutes, so we may actually have 2 or 3 sessions in this series, because what I want to get across to you is very important, and I want to make sure that I go in depth. Now, many of you are aware that for many years, I've been trading now for over 25 years. I've been constantly looking for a better way to improve my entries and exit, to improve my trade signals, if you like, and to remove as much emotion from my personal trading as possible. Now, you also hear me talk about, if you've listened to, or if you're a current member, or if you've seen a lot of my YouTube videos, that I talk about what I call the shiny object syndrome. That is, many traders jump from one strategy to another. As soon as something looks good, or they think it's got potential, they jump from what they're currently doing, and they continually do this, spending a lot of money along the way and not really reaching success. So what I'm going to be showing you here is not doing that, but I'm going to be showing you how I use some of my standard entry techniques, but using Renko charts. Now, I know what some of you are already thinking. Oh, hang on, there's nothing new under the sun. I know that, and we'll even look at a slide about that in a moment. And let me just move on to the next slide here. And Gann has famously said this: there's nothing new under the sun. However, I also do believe in Kanai. Now, I believe Tony Robbins pronounces that slightly differently. I think it's kunai, which stands for constant and never-ending improvement. And as traders, we have to become what I call a student of the market, looking for a better way of doing that, constantly improving our psychology when it comes to trading, improving our trading skills, and being open-minded, at least, that can I improve my trade entries, my exits, etc., which is very important. And that leads into another key point, traders, when it comes to trading. And you've probably all heard this: the old saying is, you can't teach old dogs new tricks. Now, many of you that are perhaps watching one of my videos for the first time, or maybe even this one for the first time, has probably found me on YouTube, where I tend to find most of my new members come from YouTube, and over 70% of them are experienced traders. Now, one of the challenges with this is that we can become very jaded, particularly if we've blown our account 3 or 4 times. And yes, I'm saying 3 or 4 times. Some of you know who you are, and we've become used to doing something, and it's very hard to change. But also, most importantly, we become, what's the word for it, jaded. So people who have long been used to doing things in a particular way will not abandon their habits. But what if there is a better way? Now, you've probably heard me say, if you watched my videos in the past, the sign of an intelligent person is how open they are to new ideas. You can still verify the idea. So the purpose of the training videos that I'm about to present to you is to present some new ideas. Now, Renko charts themselves are not new, but there's a twist to them which will make a massive impact, I believe, if you implement it, and if you study it, and if you use it. So therefore, for the old dogs watching this, I want you to be open-minded and be intelligent and say, well, perhaps there is some potential here. You see, traders, what I'm about to show you here is not going to cost you 1 cent. Anyone can go, or with any good charting package, and look up Renko charts. There's a couple of very important things with them that I'm going to be showing you, that you don't have to buy anything from me to implement them. And I'm going to be explaining what the twist is and how to use it and why it's so important. So put away your checkbooks, or just become open-minded. Don't be fearful that I'm going to try to sell you something. Yes, I will show you where you can go to register for my program and get my ebooks. I'll quickly show you that in a moment, but you don't have to buy anything with the Renko. So you'll be able to go away and start to verify some of the things that I'm telling you, and it's, as I mentioned, it's all free. Now, if you remember, or if you've watched my videos or some of my videos. Now I now have a couple of 100 free videos on YouTube. In my trading program, the Day Traders Fast Track program, there's actually 300 videos in it now. I release new videos every week that are for members only, and you'll hear me constantly talk about this. Is the questions that we ask ourselves really control the quality of our lives. And so as you go through this video and any of my other videos, I want you to be asking yourself, how can I use this to improve my trading? What's great about this? What will I do differently next time? What can I learn from this? How could I improve my entry? How could I improve my exit? How could I better qualify the trade? Because what I'm about to show you, I believe, will have a massive impact, because I'm going to be showing you some of the research we started doing 7 years ago, and I spent a lot of money on this research when it come to Renko, but I put it aside, and I'll explain why in a moment, and now why I've gathered the interest or picked it back up again now. If you're a newer trader, or if trading has not been kind to you up till now, I want you to be really listen to what I'm about to say here. Any good trader, and you should have this book, and if you don't have it, you can Google for it. You can buy it from Amazon, or it's even available free on the internet now if you Google the Disciplined Trader for the PDF. But very important, Mark Douglas is probably one of the best or most important trading psychologists the last 30 or 40 years, probably the very best of the best. Unfortunately, Mark passed away some time ago now, a couple of years ago now, but he's absolutely brilliant. But I just want to bring up an important part of what Mark says about this. On page 209, he says here, to become an expert, choose one simple trading system that identifies a pattern, preferably one that is mechanical instead of mathematical, so that you'll be working with a visual representation of market behavior. Now, in my program, I teach traders how to trade patterns, because patterns repeat themselves every day. No matter which time frame, patterns are geometric and fractal in nature. And so what you have on, say, appear on a 1 minute chart will appear on a range chart, etc., whether you're trading a 1 hour or a daily or a weekly. So what Mark is bringing up here is that to master the art of day trading, or trading full stop, whether it be swing trading or position trading, you want to identify a pattern, and once it's mechanical, and master that before you move on to another one. The great thing is what I'm about to show you using Renko. Patterns are so easy to identify. Now, once again, I want you to drop your skepticism right now. Be open-minded as I show you this, because remember, this is free. You'll be able to go away after this 30-minute session and start to apply this, but then be ready. I think we're going to be going over 2 or 3 sessions with this, and members, I'll show you where you'll get some additional resources on this in a moment also. So as we get underway, I do need to, of course, put up the risk disclaimer, otherwise the CFTC and the NFA will be after me. There is a risk in trading. Members, you see this on every one of my videos. I'd recommend traders, I'm not going to read this line by line. Please pause the video and read the disclaimer. If you're not already a member, you can visit my website and download the download link below and request my ebook, The Truth About Day Trading. Also, one of my training manuals, huge amount of resources in there, all free. You can request those, and once again, visit my website. And most importantly, as I have thousands of members around the world that are members of the Day Traders Fast Track program, for $197 you get all of my indicators, my complete program. Once again, I'm not going to turn this into a big advertisement. Visit my website, find out more information about the Day Traders Fast Track program. This is my passion, this is what I do, this is what I love. It's the most comprehensive program in the world today, and there is no upsell, there's no coaching programs to buy, etc. Traders, end of ad. Let's now get back into the content. Now, going back 7 or 8 years ago, it's actually, I started on this in, I think it was 2008, where we started researching for one of the programs that we have, Renko, a better way of trading. And So we started looking at Renko and we got really excited about it, and I'll just show you part of the report in a moment. And the more I looked at it, it had huge potential, but with TradeStation at the time, as you'll see in a moment, Renko bars had no wicks, therefore it lacked a lot of data on the actual bars highs and lows. And once again, stay with me, I'll show you this in a moment. So the result was that the bar type couldn't be back tested in modern trading software, and there are a whole lot of other issues with it, where when I look at a chart, I like to read the information, particularly the highs and lows. Is very important, and that was an issue with Renko at the time. Now since then, there's been some major developments within the past, particularly 8 to 12 months when it comes to Renko, and I had a number of staff that actually brought this up with me, and particularly with the latest version of TradeStation, it had totally changed. Now some time ago, and even before it was available on TradeStation, you could get it in NinjaTrader, and there are a number of other plugins that you could purchase for your particular software program, where you could actually start to display the tails on the Renko, which I'll explain and show you I'll show you in a moment. So many of the enhanced versions of Renko recently introduced to solve the no wicks problem of the traditional Renko. Modern Renko bars do show actual bar lows and highs, so that you can have a more detailed investigation of price action, optimize stops and targets, and most importantly backtest your Renko based trading systems. And so there's been some major developments in this area, and you'll see why this is important. Now one of the challenges for experienced traders that have perhaps been using maybe tick or range or volume charts or even time-based charts is, like anything, it takes a period of time to get used to reading another type of chart. So we're going to talk about that in a moment. Now this is a report that we put out back in 2011. It was an internal report called Come Join the Renko Revolution, and this is where we put a lot of work in, and John Shealy, an author of a number of great books and been in industry 40 years, who was working for me, had him full-time on this project. And this is just part of a report that he put together. But as I mentioned, for me and for introducing this, there were a number of handicaps with it that have now been solved. And just looking at this, this is going back there to 2010 with divergence signals. That is, using Renko, a beginning trader and even a trader that's struggling or an experienced trader can focus on the primary price direction that the Renko chart displays. Double tops and bottoms are very easy to recognize with the Renko chart. Support and resistance is easier to see. Divergences are easier to see. Particularly the trend, as you're about to see, is much easier to identify. So there are just so many benefits of Renko. And so we went back mechanically and started to code some of this here on the pound USD, which is not new. We had and so we're looking at FOREX here at the moment. There were some issues there on equity drawdowns, but the bottom line was it was still very profitable using Renko. And so there's just some big benefits, and that's the purpose of this series, is to really train you and to show you what to look for. Now because I'm going to be limiting this session, this particular one, to 30 minutes, so I just want to quickly cover this for members. So members, I know that you're going to want to go and start to apply this and look at this straight away. So the setups that work really well are the T1, the T2, the double tops, double bottoms, your 34Bs, 89s, and your rule of two. As you know, the rule of two I love. With Renko, it's absolutely an outstanding strategy. The trigger line reversals, which is the trigger line, I'll show you this in a moment. We'll cover this more in the members ones, I should say. An ATR stop and flip. Now for our counter trend traders, the V trade, which is really the T3, double tops, double bottoms, your standard divergence, and your 1D and 2D. And for using exits, and this applies to all traders here, that you can use a fixed target, of course, an ATR stop and flip, using the trigger line cross, or a 2 brick trail. Now all of these I'm going to be covering in a number of detailed videos, and very quickly what I'm going to do is do some separate videos which will be posted in the members area, which will cover the NQ, ES, CL, gold. I'll also cover on 3 of the currency futures and also on 2 forex markets. So I'm going to be showing you what I believe are the sort of ideal setups and brick sizes, etc. And very quickly, let me show you where these are going to be stored, oh sorry, where they'll be uploaded to. So I've logged into the members area and I've opened up a new folder called Renko charts. Now I've already got a couple of introduction, these were actually 2 recordings done by John Shealy some months ago, and you'll start to see then the public and member recordings, but of course there'll be specific recordings where we get very in-depth using the day trader fast track strategy. So you'll find them in this folder called Renko charts. So you'll start to see them uploaded from the 24th of the 11th 2017. Now it's going to take me a week or 2 to get through all of those, but you'll find them all there. So getting back to this, and I mentioned this earlier, traders, if you're currently using a tick, range, volume, or time-based charts, point or figure, it really doesn't matter what you're trading with. What I recommend is you set up a screen, and what I've got here just a screenshot, and we're going to look at this live on my charting packet platform in a moment, where you've got there on one side have your Renko set up, and on the other have your range or your tick or whatever chart, and just start to get used to looking at these, and after a period of time it will become second nature. That's if you find that it works for you. I believe it's going to be what it does, and what they do, traders, is remove a huge amount of noise from the screen. Now there's some drawbacks which you're going to be covering here, but it'll make trading a lot easier for you, and so we're going to be covering, of course, a lot more of this. So let me give you a quick bit of history. Now I know this is basic for the experienced traders, but stay with me, it'll only take a few minutes. So Renko charts go back 140 years ago. Now as mentioned earlier, Gann famously said there's nothing new under the sun, and you also probably hear me say beware of the man that says he manufactures antiques. I haven't discovered anything new here, just the development. There's been some additional developments such as the wicks on range charts. So basically Renko charts, what the word Renga means is bricks, and that's what they look like, and they're very similar to range bars, as we're going to be looking at also. Now what they really do here is it takes a lot of noise out of the market. Now this can get used to a time period, or let me say this again. As always, traders, my videos are raw, real, and unedited. It can take a little time to get used to switching from, say, a tick to a Renko, just like it does to a range, because it does remove the noise, but that is good overall. Now because time's not a factor, we're going to be looking at that on a chart in a moment. That is, volume and time is not a factor in the creation of each new bar. A new bar can be created within seconds, or it can take hours, depending on the level of activity and the volume and the pip or tick count of the Renko chart. Now Renko charts ignore minor price action, and that's where I used to have an issue with Renko, because once again the standard Renko chart would actually hide the tails, the highs and lows, and that is an issue, particularly when we want to look at where our stop should go, etc., where typically I like to place my stop at the closest swing high or the swing low. So what I found I would have to do is have a tick chart up next to the Renko chart, and in the end it just become all too difficult, so I decided not to run with them up till recently. So if we have a look at here, what I've got here is a chart, a 5-minute chart, so we can see the action here on a 5 minutes. So each new candle, as we know, is created every 5 minutes. What I've got here is a 5 pip Renko chart, so we're looking at the Forex market here, but it doesn't matter what market, whether you're trading stocks or futures, it doesn't really matter. So the same time period, so we can see here it's a lot smoother. Now when it comes down to what brick size to use, because I know some of you are going to want to jump straight off this and start to look at that. Now just remember, the greater the value of the settings, the fewer bars you have, the more stable and reliable your charts, because as we say, the lower the time frame, the more noise you have. But of course you've got a wider stop. So as day traders, which most of my members are, we're going to have a lower time frame, which we're going to be looking at and exploring and spending a lot of time on. So the smaller the value of a setting, the more bars you have, the faster your charts will update. Now of course that can be a problem at times, particularly when it comes to news. If you trade gold or CL or around a red flag on trading Forex, of course, and we'll look at a chart in a moment, the market can take off like a rocket. Now you may need to set up and have what I call a happy medium, and I'll give you and show you some options that you may have when it comes to that. So if we look at a 5 pip Renko chart and we look at a 5-minute chart, now of course one advantage of time-based charts is we know exactly when the candle is going to close, now which means we can put our order in, know exactly what is happening. However, we can also get a great deal of price action in that 5 minutes, and we can miss out on some great moves. So I just want to illustrate the difference. But look how easy it is to identify a triple top, a double bottom. It's just a lot easier than if you're using, say, a time-based chart. We can see here once again we've got here double tops, double bottoms, triple tops, triple bottoms are all very easy to identify. Once again, just a couple of slides when it comes to that. We can see it there. And one of the questions I know straight away that's going to come up, what about range versus Renkos? Well, let's just quickly go to my charting platform. I want to show you this. So what we're looking at here, traders, is, and actually if I didn't tell you what market it was, it really wouldn't matter, but it's actually the black gold, it's oil, CL. And what we're looking at here is a two tick candles here, or bricks, and we're looking at a 2 range chart on the right. Now it is actually the Globex session, so this is actually, I'm recording this on Thanksgiving Eve, so it's my time it's the 23rd of the 11th 2017. So if we look at the time, the market opened actually right here, and we can see here we've been in a steady downtrend most of the day. And what we tend to find, traders, about my time, which is 3:50 p.m. right now, we're heading towards another 2 hours will be the London session. We tend to go into a lot of sideways action until London opens. And I should also mention, of course, being Thanksgiving Eve, it's going to be the market's very quiet. Lots of markets are going to be closed, so we're not going to get the market movement. But what I wanted to point out was this here, is if we look over at our range chart, you can just see how many more candles that you've got, and that's on the right. Remember, now some traders will look at this and say and remember, and I love range as well, particularly on Forex, but once you start to get used to the price action that we get on Renko, they become easier. The patterns are easier to identify. Now very quickly, if we just jump over to here, see these black dots? So for members, these are rule of 2 trades. So we've got a rule of 2, a rule of 2, rule of 2, rule of 2. We got a nice little divergence. So I'm going to go into these. Here's another rule of 2. I'll spend a lot more time on the focused members only recordings running through these, but by using your what I call entry chart along with your anchor charts, which I'll go into in depth in the members videos, you can see here, look at this trend. So we're going to be looking for taking all the Renko trades, or all the trades, in the direction of my anchor chart. Okay, so here we can see I've got a pullback, re-entry, pullback, re-entry, pullback, re-entry, and they're confirmed by my anchor charts, which I'll spend a lot more time on. So let's now go back to the PowerPoint. So what you could see there, or hopefully see, traders, that the Renko chart gave you a lot less noise. Now yes, you could have increased that from, and by the way, the range chart I had there was a 2 range. You could have increased it to a 3 range or even a 4 range, but remember, the larger the candle that you have, if you're going to put your stop above a swing low or swing high, you have a larger stop. So that's one of the challenges, but we're going to cover a lot more on that as time goes on. So let's just have a quick look at how exactly how a Renko chart or a brick is formed. Now what I'm showing you here does not have the tails on, so when we go back to the charts on the next video, I will show you and I'll explain how to read them much more efficiently. So to form a candle or a brick or a new brick here, a reversal brick, these are 5 pip bricks. It wouldn't matter whether it was a 5 ticks or 5 bricks, doesn't matter what market you're trading. To form a new brick, the market has to move 10 pips in this particular case. To form the third brick, the market has to move another 5 pips. Now for it to reverse, and here we could call this this is basically a T25 type setup, the market needs to move from the bottom here 10 pips. So there's your brick, and you've got to exceed. So if that only went up by 7, there would be no brick formation, the market may roll over. So to reverse, you've got to, even though they're 5 pip bricks, the market has to move by 10 to get a reversal. Likewise, to get this reversal, the market's got to reverse by 10 pips to actually get that reversal there. Hopefully that makes sense. So what we can see here is, to get that, there's a 10 pip move, 10 pip once again for it to go back up, a 10 pip move, but otherwise each one of these bricks is 5 pips in size. So getting back here, we can see here that 10 pips, then each new bar down will be plotted only if prices fall by 5 pips or whatever setting you are using. Now getting back to the setting, it comes down to what is the ideal brick size. It comes down to the speed of the market and what you feel comfortable with. I'll spend a lot more time on the second video on this, just to give you some really good ideas, and members will go even more in depth on this in the members videos, but for the general public that are not members, I'll give you some great tips on this. But it really comes down to what you feel comfortable with, and you need to spend some time on this because it's very, very important that you get the speed right. Because remember, when it comes to a news announcement, and let me just perhaps where have we got one? I think I've got one here in a moment. Market can take off like a rocket, particularly with your volatile markets particularly. So going to the next one, here is a good slide, sorry, and here it is here. So we can see in a fast market, the market is absolutely taken off like a rocket, and this is where you've got to be very cautious when you're doing your back testing. Because you can look at it and say, great, I could have got on this, and I'll show you some techniques on how to stay in these moves. I've got some great ideas on how to capture these great moves, which I'll teach you, but you've got to be on them first. So just remember, when you're doing your back testing, just go back regularly and just check what time these have been set, because sometimes you'll find that they just weren't tradable, and you've got to be really honest with yourself when you're doing this back testing. So the next one here I want to get across is, we spoke about time. So remember, the candles are formed on price action, not volume, not time. So we can see the time it took for each one of these candles to form. I should say bricks. 9 minutes, 36 minutes, 8 minutes, 9. So you can just give you an idea on the time it can actually take. So if you go into a 10 pip, so once again, just to really drum this home, if you're on a 10 pip, if you're trading Forex, you can see there you need a 20 pip reversal. I just tend to find that a lot of traders get a little confused when they're looking at these. Now just before we sign off, we're just about up to our 30-minute session here, is that you'll hear me talk a lot about what I call the V trade when I'm trading Renko. The V trade is where I get one of these great moves and you get a great V trade, and we're going to be talking more about this, members. I'll spend a lot of time on this, but just something for you to start to look at in the next few days. If you start to set up your Renko, look at your V trade. So here, this is once again on oil. So on CL, I like the 2 tick, maybe the 3. If 2's a bit fast for you, look at the 3 tick. Likewise with gold, generally speaking, 2 tick is fine. You might need to jump up to a 3 tick. As we know, gold can take off like a rocket. There are specific turning point times, so just look for what we call the T tick. Now also, here we are showing the true high and low. Look, we're up to 30 minutes. I'm going to just stop it here because otherwise we'll go for an hour, and I want to limit this. So look, we'll sign off on this. So traders, if you haven't already, subscribed to my channel for the second video on this. Members, I've given you a ton of information. Go back into the members site, just as a reminder. It's in the folder Renko charts. We'll be able to watch those 2 existing detailed recordings in their Renko charts. So traders, thank you very much. We'll see you on the next video. Please subscribe, and good hunting. But I'll have the second video done over the next day or 2, which I'll send out to the general public, and members, you'll find it in that folder. Thank you.